Hey everybody, hey, my name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com, and today is Wednesday, ladies and gentlemen, the 6th of August 2025 still. So yes, welcome everybody. Look, we're going to have a nice session. We're going to talk about markets. It's midweek. Let's see what's happening and what has happened so far. We have a few economic data sets that came out, that are still coming out, so very important. We'll look into all that. So hey, stay tuned. Hopefully you'll enjoy the session, and I'll see you in a bit. All right, ladies and gentlemen, hello, good morning. My name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com, and today is Wednesday, ladies and gentlemen, the 6th of August 2025. So welcome everybody. Look, it's the usual show, the usual thing that we do every Wednesday. We look at the markets, we look at the midweek, what has happened so far, and basically what can we expect going further in the next kind of 3 days that we have left of trading for this week. Look, also just a quick announcement that from on Friday there won't be a session, the Markets Talk, and next week as well, for the full week we won't have the Markets Talk session, so I'll be a little bit away, and I'll get back to you on the 18th. Let me just double check very quickly. Yes, the 18th of August I'll get back. So yes, today's session is the last one for up until the 18th of August. So also, just before we jump into all this action, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. I'm just going to put my usual good morning in the chat room. Good morning, everyone. Good morning, everyone. There we go, spelling it out for myself here. There we go. Look, it is an interesting week that we're having. Maybe not the most eventful in terms of economic data, but certainly we're getting the earnings from major companies. I'll pick up on a few of the companies, but yeah, let's quickly mention our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, Nikkei225. So, look, in general, Asia right now looks. Asia right now looks quite interesting. Again, it's picking up the pace here. We can see that Nikkei kind of is somewhat positive, or at least trying to remain somewhat positive this week. Last week it was a little bit of a bummer, but hey, after that deal that they've reached with the US, look, in terms of all these deals, I would say this way, that it's kind of okay. On one hand, maybe somebody might say it's binding, but somehow I think that it might not be very much binding, because in a way, because the investment is not required straight away. I'm talking about the countries, let's say like Japan, like EU, which are which have promised to invest into the US that much and that much, like Japan, for example, 550 billion. Okay, they might go for a few purchases here and there. However, will it equate to the same 550 billion, or for the EU, in the EU's case, 600 billion? I don't know. It's a good promise. I think that it's something that to kind of keep the market afloat, not from from selling off. So when I say that this is a nice show, maybe there are some elements. Look, in general, you cannot say that there's not an agreement. Yes, there is an agreement. Japan will have to open up the market. US will get the 15% tariff on Japanese goods. So in a way, there is a deal. However, about investing into, or let's say purchasing US goods for 550 billion, I'll see it. I'll believe it when I'll see it. So at this point, it's just a nice promise. Let's see if that's gonna happen eventually. So anyway, but in general, that seems to be enough for the stock market. The stock market for the stock market from collapsing. So because again, we were getting to this date, the 1st of August last week, and everybody was kind of I wouldn't say panicking, but yeah, it was a bit of an unpleasant moment for the stock market. So, long story short, for now, I would say this way that yes, we got the positive news. Great, we pushed higher. We're now also near my key resistance area, which I talked about previously. This 40,855. If we can get a nice clearance of that one, I'll go to the upside. Long story short, for now, I'm cautiously bullish. This downside line, we can get rid of it. It was a tentative downside line, don't get me wrong, but hey, still had it on there on the chart. And if we can clear this 40,855 territory right here, and we can stay above it, I'll go to the upside. China 50, beautiful movement here, beautiful move to the upside, beautiful rebound from that 50-day EMA. So far, I would say the trajectory is still to the upside. So I will start shifting my attention to some lower areas if we do fall below the 13,675 territory-ish, approximately around here. And basically at the same time, we will fall below the 50-day EMA. Now, so yeah, that's a simple approach here on China. In terms of actually economic data, let me just double check if there was something that came out recently. So yeah, Tianjin manufacturing PMI. This is something that should have come out. I mean, why I don't have the data for that? Let me just double check this very quickly. No data on this one. Let me just double check if I have data on another platform, because it's quite important. Because look, I mean, it was sitting here. Then why not to let's have a look. Tianjin Services PMI for July. There we go. Okay. So the actual number came out at 52.6, and the that's for the services, Tianjin Services PMIs. The previous number was at 50.6, and it came out at 52.6. So good number. I think that this is what's keeping the China 50 index afloat. That's a good number here. Of course, everybody's now talking about the possible meeting between the two leaders of the two top countries, the strongest countries in the world economically, I think that this I don't know if this is going to happen. Apparently, from like listening to the interview of the U.S. leader on CNBC. It seems like it's not that he wanted the meeting. It was more of a the Chinese leader that wanted the meeting. So again, yeah, we will never know. We us mortals will never know, unfortunately. But we have to kind of in a way believe what we hear. It's a difficult one, of course, but hey, we need to go. Just to look. As always, I keep on saying, you have your own head on your shoulders, and you'll be fine. Anyway, jumping into the U.S. indices. Oh, by the way, in terms of China, other China data, nothing major today. Tomorrow, trade balance. Oh, trade balance is an interesting topic, which I'll pick up right now. So trade balance is expected to diminish here. So yes, interesting. We'll see how that plays out. But U.S. indices, right? Okay, look. Yesterday we had a bit of a down move here. Looking at the cash index, it seems like we are kind of wiping out all the losses that were made yesterday. We're pushing higher. We are in the earnings season right now. We are seeing some, we saw some companies delivering this week, some major ones. Everybody's talking about Palantir and AMD, So yeah, those were great results and everything. AMD had a good, somewhat of a good result. EPS was as expected, as forecasted. The revenue went higher. Market cap is higher, but the thing is, that the AMD stock did correct lower, if I'm not mistaken, if I saw it correctly. AMD, wait, I don't have the pre-market price here yet, but let me just double check very quickly. I think another source. And another source I have, it's currently trading around 133 after hours. So 163. 33 would be a big drop here. 63, so somewhere around here. Okay, look, if you are trading stocks, okay, look, it's if we do apply technical analysis on this, then I would say we have this downside line taken from the high of the 31st of July. At the same time, maybe we could actually draw a nice falling channel. So if that's the case, if we can do this, then 163 is basically near the lower side right now of this potential falling channel. Again, this is just an idea. We cannot really, this is just me trying to foresee the future in a way. So if this would be the case, if this is a falling channel, then a rebound could be possible. So let's see how this is going to play out, of course. For now, we're watching this very carefully, and hey, looking at the indices here, Dow Jones is trying to make its way back up after last week's devastating result here. Look, last week we had a bit of a bummer here in a way. After hitting the new all-time high, we corrected lower, and now we're reversing about like at least half of it or something. Let me just double check. Let me just apply my beloved Fibonacci on this one. So let's see what's happening here. Okay, we did the 50%. We're now aiming for the 61.8. Right. Okay. Let's see if we can travel here, and let's see if we can go again maybe towards the all-time high. Look, I'll put it this way. I think for me at this point, if I'm looking for the downside, a drop below the 50-day EMA here is needed. This way more sellers here could join in. For the upside, I would say that if you're looking for some higher levels, well, basically there is an opportunity to go to the upside. I'm looking at the cash index, by the way, so just to let you know. So in a way, because we're currently clearing the high of yesterday, and if we can continue to trade above that 44,300 zone on the cash index, I will continue targeting the upside, because again, we are now confirming a higher high. So this is already seen as a bullish indication, and we cannot deny that. So it kind of increases the chances for a further move upside, but as always, nothing is guaranteed. So it's like you need to be very careful. So whenever, let's say, you go for breakouts like these, once you're in profit, I would suggest quickly put a stop loss on a break even, just in case it kind of reverses against you and takes you out. So it just it's kind of common sense thing. So yeah, but of course I do understand that the market, what it could do is it could retrace back down, stop you out, drift a little bit, trade around here somewhere, and then push back again, back to the upside. But then what's stopping you from entering again? So again, we're always trying to protect ourselves, ladies and gentlemen. That's the goal. That's the main point here. So hey, that's how we roll. Anyway, long story short, the problem that I'm seeing here right now is that yes, are we gonna go all the way back to the to the previous highs here, or should I say the current all-time highs? At the moment, I'm kind of aiming for that. Let's see what's going to happen, and then we'll go from there. If we somehow start dropping back below the 44,000 zone, I am getting a little bit skeptical about the upside scenario. Again, I do understand we have the 50-day EMA here, the 100, which could provide support, but at the same time, they could be magnets. And they could be attracting the price. Again, let's see. For now, like I said, I'm watching these areas on the Dow. S&P 500, look, I'll go through these other indices, US indices, and then I'll jump into the economic data, US economic data. Because look, S&P 500 looking quite bullish, to be honest. I mean, This here, this area 6,333. Yep, it's. I think it's the 6,340 is the one to watch, because yesterday we had a nice false breakout above it. We failed to stay above it, and then we drifted back down. But we found good support around here near the 6,284.85 zone. So in a way, now there is a chance for this one to kind of push to the upside. But for that, we need a nice breakout above the 6,340, 41 zone, something around here. It was a good area of resistance. If we can get a nice clearance and we stay above it, I'll go further up here, maybe even towards the all-time high. NASDAQ is drifting back up. It is trying to push back up. Look, with NASDAQ, it's a little bit of a different game here. I mean, the tech stocks are leading the way. Let me just go into my beloved Finviz website. I mean, this is one of the popular ones here. Let me just check on the groups. So in general, if we look at the year-to-date performance, utilities, basic materials, technology is kind of somewhere here, but utilities are the ones that are leading the way, basic materials as well. Yeah, look, technology half-year performance, that's, yeah, technology was the leader. Basically, technology and utilities are something that we are watching very carefully right now, because, again, a bit of a decline could be possible at some point. So, yeah. It's a little bit of a tricky moment right there, but technology. Look, we had a great run in general. Nasdaq is, you know, look, if you're asking me about this movement here, I would say I'm a little bit more bearish. But if we somehow pop above the 23,261 territory here, I will go a little bit more towards the upside. For the downside, what I would like to see here is a break of this upside line here, and a drop below the 22,584 zone right there. If we can get a nice clearance here, I will go to the downside. Yeah, look, for now, I would say this way. For now, cautiously bullish, but we're watching the economic data. Look, one of the economic data sets that came out on Tuesday, and quite an important one. And initially, that was the S&P Global Services PMI final. It came out higher than the forecast and the previous. But the ISM Services PMI came out a little bit of a disappointment, basically fractionally above, fractionally remaining in expansion territory. Now that's, I think, a little bit of a worrying signal, because look, this survey is quite an important, apparently it's more of a prestigious one. Well, not apparently, of course, we know that it's more of a respected one, and that's why, you know, the number is coming out at 50.1. That's a little bit of a bummer, I would say. Anyway, we're watching other economic data sets that are coming out. Okay, today we have the mortgage year, this 30-year mortgage rate. So look, I talked about this briefly previously, and I said to you that, look, I think that while we remain below 7, I think that that's still okay. However, if you would ask me, what do I see here? Do I see something like a you know, if I would apply technical analysis on this chart, I would say there is a potential for this one to pop higher. So because again, we have something like this and something like this. Now, again, it's very subjective, don't get me wrong. It's a kind of a triangle pattern here. The prevailing trend was to the upside, so the greater chance for this one to pop out is to the upside. So if we do pop out higher, that could be seen as a bit of a negative moment here, because again, you know, if the mortgages go higher, if people cannot kind of afford, you know, or let's say they're spending more on their mortgage, because that's kind of the one that you always need, right? You need a roof over your head. That means that, you know, something else they will be avoiding to buy. And yes, that's what the economy, I think, is worried about. Anyway, so that maybe that's why, you know, the current administration is trying to force the Fed to go and cut rates. I think that after the Friday's job number, which was a disappointment, I think that this is, yes, I think for sure we're going to go and cut rates in September. Will it be one or two by the end of this year? I think, look at this, how interesting, look how interesting it is. We are expecting now two cuts by the end of this year, but the 3-cut per probability has increased. It's almost the same as 2-cut. Okay, this is interesting. So maybe we're expecting a new Fed chair, maybe something like that. Again, let's not over speculate. Let's keep an eye on this, but certainly it's an interesting moment that we're living through. And in terms of other economic data from the US, look, on Thursday we have the initial and continuous jobless claims, the usual one. Some used car prices. Maybe that's going to be an interesting one. But the Fed balance sheet is coming out, right? Okay, that's an interesting moment here. And apart from that, that's kind of it in terms of, but one piece of information that came out yesterday, if I'm not mistaken, let me just double check. Yes, yesterday, the trade balance. Now, this is something that the current administration, the U.S. current administration will start rubbing into the faces of everybody, because basically the deficit shrank, and from minus 71 billion to minus 60 billion. So in a way, that's not bad, I would say. This is a good number that they're happy about. So hey, let me just launch the chart here. I want to check what do we the U.S. balance of trade. Look at this. It did rise very sharply, boom. So there we go. Very quick, sharp rise. I mean, this is like after April, after April's announcement. So in a way, somebody will say that it is working. Because we got to the levels here, which are of August of 2023, and in general, again, if we're applying technical analysis on such a chart, then you can see that we reverse sharply, and in a way, there is a chance of a nice pop here. Look, if we do pop above this 200-day EMA here on my chart here, on this monthly chart, then yes, I mean, we could see a nice move to the upside. In general, look, it's not a monthly chart. It's just like every point here. Okay, it can be a monthly chart. That's fine, because every point here is a month. So yeah, in general, look, I mean, we could get back to levels, and last time the U.S. was in profit, it was in positive with a positive trade balance, was back in 75, so yeah. It has been, look at this, I mean, since, yes, we were falling very heavily here. We were falling very heavily, and I think that this is what, the current administration is trying to do. They're trying to kind of get them out of this. Look, it's not wrong, for sure. Every country, every leader does want to, improve the trade balance. And so far, let's see, if the measures are drastic and the measures are if drastic measures are needed, then so be it, in a way, right? However, there is a question of morale as well, of course, in all this. But anyway, it's a debatable thing. It is a really debatable thing. If you're watching this video, honestly, let me know what you think, because again, it would be interesting to know, somebody else's opinion as well. Anyway, so coming back to the situation here. So yes, we understand now what are we watching on the U.S. indices front. Let's have a look at the U.S. dollar. U.S. dollar is flat. From the technical perspective, it looks more like a bearish flag. And we had a nice decline here, now a gradual decline here. So, I mean, we're stalling a little bit, but we're stalling above the 50-day EMA. So basically, very simple. If we do drop below the 50-day EMA, I'm leaning towards the downside, period. And then we'll go from there. For the upside, well, I think what could be best is to watch maybe for a push back above the 99.34 zone, but then we have the issue of the 100-day EMA. So if we clear the 100-day EMA, no, that's going to be quite interesting to watch, and then we'll go from there. So now then, looking at this again, like I said, I'm a little bit bearish on the US dollar right now. Let's see if that's going to work out or not. But basically, I am examining for now this scenario. The German index DAX. The German index DAX pushed nicely back up here again, trying to wipe out all the losses made last week. So far, it seems like we're on the right track. We pushed back above the 23,000 here, 23,922 area. I talked about it. We pushed back above the 50-day EMA, shown here as the green line. We're currently staying above it, and the question is right now for me, are we gonna remain here above this area? Look, I'm not gonna rush into things. For now, I'm gonna remain cautiously bullish, but certainly if somehow this drops back below the 50-day EMA, then great. I will consider a move to the downside, because maybe this is what we're seeing here is a nice little just a little correction before another possible leg of selling. If we take the Fibonacci and draw it this way, we'll see that we're resting perfectly at the 50% retracement. Can we go towards that 61.8? Well, we need to clear the 50. At the moment, we're just bang on this one. And I'm looking at the cash index, by the way. The FTSE 100, let's have a look at this one very quickly. Where is that FTSE? Yes. So similar story. We're very close to all-time highs, but we need a clearance of the current one in order to go higher. For the downside, I need to drop below the 9,041 zone. If we can clear this, great. I will go to the downside. While we are remaining here in this territory, I'm just observing the price action. Ladies and gentlemen, let's jump into the Forex world very quickly. AUDUSD pushing back up, or at least trying to do so, because the US dollar right now is on the weaker side. So yes, we're stalling around the EMAs, and if we can kind of climb back above this 50-day EMA, I think I will get a little bit more comfortable with the upside. Look, if you remember, previously I had this like rising wedge pattern there, and I'm not going to bring it back because I think it got violated, so maybe it's not that. So maybe we we should kind of keep it simple. At the moment, I'm just sticking to my EMAs. I think that those are a little bit better here. So for now, am I bullish or bearish? I would say I'm cautiously bullish, just because we're testing right now the 50-day EMA, so we need a clearance of this 50-day EMA. If we can get that clearance, I'll go to the upside. AUDNZD very quickly. Look, we had some data, by the way, from Australia and New Zealand. Let me just quickly jump in here. So not today, yesterday I think, yes. We had the household spending that came out. It was a good one there. So that's also kind of adding support to the Australian dollar. Then Wednesday this morning, we got the New Zealand labor market data. So unemployment came out at 5.2, better than the forecast, but worse than the previous. Employment change, a bit of a decline right there. Australia is the next one in line, if I'm not mistaken, to deliver. Let me just know that the trade balance is coming out, and was it Friday? Oh, where did I see the Australian numbers? Just bear with me one moment. Where are the numbers that I saw? So let me just double check if maybe I was looking at next week. Next week, I think, and maybe the numbers are coming out. Okay. Yes, unemployment 14th of August. So basically, yes, next week we're gonna get the Australian numbers. That's where I saw it, because I was reading the week ahead. from one of my colleagues, and he kind of put it there. So yes, next week we're getting the unemployment rate. The current, we don't have an expectation yet, but the previous number was at 4.3, which was a little bit of a disappointment. Anyway, so we're watching right now AUDNZD. Look, New Zealand dollar right now is on the weaker side a little bit. However, I will get a little bit more comfortable with the upside here on this pair if we do clear that 1.0988 zone. AUDJPY, looking at this one as well, the risk on, risk off monitor, and yes, it's pushing back up. So it kind of oscillated around the EMAs here. The 100-day EMA was the last one that it kind of supported, and we're now seeing a rebound and a push back above the 95.74 territory. So this is really, really good in a way. So, however, more buyers here could join in, and certainly if we do clear this 97.32 territory, yes, I'm going to consider a move to the upside. Long story short, am I getting bullish right now? No. Well, I'm cautiously bullish, but yeah, I'll get more excited if we do see a push above the 97.32 zone right there. For the downside, a drop below that 94.83 territory right here could attract a few more sellers, because not only would it confirm a forthcoming lower low, it would also clear all the EMAs here on this daily chart, and more sellers could join in. NZD USD is sitting kind of. It's trying to push back up, but it's struggling with the with these EMAs. So if we continue to trade below these EMAs, I'm going to continue targeting the downside. NZDJPY, similar story like AUDJPY, but this one looks a little bit more bearish than bullish. So yeah, look, if we can get a nice move here, kind of away from this barrier, from this 87.54 territory. If we struggle to overcome it, then yes, another decline could be possible, but I need a clearance of this 86.66 territory, and then we'll go from there. USDJPY, now this one is stuck right now, so it's not really very attractive, I would say. Also, we had a violation here, but that's, on a weekly chart, it's a false breakout. So again, I would say it this way, for now, ignore everything else, just the fact that we're currently stalling in between the EMAs. Now that's something that we need to kind of keep an eye for now. And long story short, I will say, if I'm going to get a little bit more comfortable with the upside, if we do push back above the 148.18 zone, somewhere around here. I know it's a lot of territory here. Maybe somebody would say, well, but what about, the 200-day EMA? Why not from here? Because what my problem here is that if we're going to climb above the 200-day EMA, we're going to travel a little bit higher, test this area around 149.18, 20, something like that, and then kind of reverse back down. So basically, we could be seeing ourselves a nice little possible head and shoulders pattern then, left shoulder, head, right shoulder. If we clear this territory, I would kind of discount the head and shoulders pattern potentially. Again, this is an idea. I don't want to rush into things yet, but certainly, let's see what's going to happen. If you are comfortable of, trying to capture this little moment here, look, you can keep an eye on the 200-day EMA, but, just kind of be careful around here. Let's jump into USDCAD here very quickly. It still remains below this 1.3797 territory, so hey, if we continue to trade below that, I will continue targeting the downside. A drop below the 50-day EMA here could be nice, could be an interesting moment, and if we can get this move, if we can get that drop below the 50-day EMA, then yes, the next target is this upside line, taken from the low the 16th of June. USDCHF, very quickly, we're stuck. We're really stuck here. Of course, the more more squeezes like these, the more interesting the breakout could happen. Potentially. I cannot say that it's for sure, but But anyway, look at this downside resistance line taken from the high of the 3rd of February, the highest point of February of this year. And yes, we had a violation of it, but we're still trading. We're still trading below that downside line. But at the same time, we are remaining above the 0.8038 zone right there, and this is where. I would say, like it's a difficult one. I mean, because you want to say we're going to be, bearish here because we're still below this downside line, but no, because we're holding above this territory. So yeah, I think my preferred scenario to the downside is on the break of this upside line taken from the lowest point of July. Let's have a look at the Euro USD, ladies and gentlemen. So Euro USD, I would say a nice one here. It's a nice bullish flag formation right now. What we're seeing here. So maybe, just maybe, it's going to work out nicely. Let's see. Who knows? But hey, I am, like I said, I'm being very careful right now. I will consider some higher moves if we do see a pop above Friday's high. Very simple. If we do see a pop above Friday's high, we're already above 50-day EMA, that's great. But now just for that extra little confirmation, like just a little bit of a touch right there, just to kind of, help us out here. And if we can get that move, boom, I will aim for this downside line taken from the highest point of July of this year. And then we'll take it from there. And look, whenever I say, whenever I have to kind of make it clear again, I've mentioned this before, that whenever I'm targeting a level or an area, or when I'm targeting a level or a line, I'm always kind of aiming for the area near that. So basically, I would say I am aiming for this, if I'm aiming for this downside line, doesn't really mean that we could see a test of it. Maybe it's gonna travel a little bit closer to it, come very close, and then reverse back down. So maybe let's say it could travel here somewhere where the arrow ends, find resistance here, and then reverse back down. And this becomes sometimes frustrating. This is what people sometimes that's why they stop trusting some sort of levels or lines or whatever. No, don't do that. Just remember the opposite. Remember, not the opposite, sorry. Remember another thing, that, like I said, it's always the area, never the exact level. Sometimes, yes, the exact level happens. Great, that's wonderful. We're very happy with that. But because if you're seeing something like that, if you're putting a stop loss or take profit somewhere near these levels, then the market also sees this, and sometimes the market does like to do, something which is, against the trader, but, or at least it seems like that, But hey, for now, like I said, aim for the area near something, because maybe it's not this line. Maybe it's this line. Maybe it's a little bit lower like this. So yeah, that's why everything. What I say, what people say, what the market analysts say, it might be a little bit on the subjective side. So we're trying to, basically, because the whole point is that we're trying to make sense of what's happening in the market right now and apply it and try to potentially forecast where a certain instrument could go. This is where, like I said, that's why we're doing all these forecasts. But is this can we foresee the future? Probably not, because nobody would be showing up on TV on the screen. Everybody would be sitting somewhere, themselves, tucked away, hidden, and just kind of seeing the future and just taking their profits. But anyway. Look, for now, that's my game plan here on the euro. If we start falling below the 50-day EMA, I will consider a move to the downside. EUROJPY. It's an interesting one here as well. And hey, looking at this downside line here, if we do remain below this downside line, then I would say, yeah, there is a chance for this one to move lower. However, preferably a drop below the 50-day EMA would be needed, just for just for that extra confirmation. But at the moment, yes, we're expecting we're not expecting, but we're watching and we're considering a possible break of this downside line. If that happens, okay, great. It opens the door to some higher levels. Does it mean that we're going to go up and away? No, but certainly we could start slowly grinding higher and aiming for some, for some good targets right there. Let's jump into GBPUSD very quickly. So yes, GBPUSD, watching this one very carefully. Why? Because of Thursday. Thursday, we have the BOE interest rate decision, ladies and gentlemen. That's expected to be cut. The interest rate is expected to be cut to 4% from 4.25. Okay, if that's going to be the case, we could see a bit of weakness in the British pound. You can see that we have recovered somewhat. So I recovered some of that drop, this big drop that we had. Let's see in the Fibonacci. How much was that? 38.2. I'm not going to be surprised if we, for example, somehow rally to 50% here on the Fibonacci retracement and then kind of reverse back down. Look, I'll say it this way. As long as we stay below the 38.2, I will continue targeting the downside, because at the same time, we stay below the 100-day EMA. So it could be, it could be a nice good barrier right here, a good resistance. If we clear this territory, I'm leaning a little bit more towards the upside. Then initial target is the 50%, but then we'll see. If we can break it, okay, we'll go higher. But if we cannot break it, I'm leaning towards the downside. Jumping into gold, ladies and gentlemen. Gold yesterday, what a recovery yesterday gold had. And look at this. We initially were selling off, we were drifting lower, but then at one point when we reached the 3,351 zone, we very quickly started reversing back up, and the market started selling off a little bit. We saw that, and gold started picking up interest. Okay, that's fine, absolutely fine. I'm not saying anything here. In a way, there is a chance for this one to drift back down for a bit of a correction. But at the same time, look, after such a great rebound, and it seems like the market is strong here. It seems that gold is strong, so maybe we could go further north. So for this week, right now, for today, let's say if we can clear yesterday's high near the 3,390 zone, I'm leaning towards the upside. I'm leaning towards my target here, this 3,430.40 zone right here. So that's a good area of resistance. Hey, let's see if we can reach that. Jumping into silver. It's an interesting one here as well. And if we do remain above, or somehow if we do push above the 37.89 zone right there, I will go to the upside. I will go higher, and then we'll go from there. For now, long story short, I am cautiously bullish, yes, but the fact that we're holding below this 37.89 zone, that's a little bit of a bummer. I would like to see a push here above this area, above this hurdle here. If we can get that moved, then yes, wonderful, more buyers could join in. For the downside, 37.30 is something that I'm watching here, and if we do get a nice drop below that, my next target is the 50-day EMA once again. Palladium, just a quick glance, clearing this upside line, and let's see if we can drop below the 1,178 79 zone right here. If we can do that, I'm leaning towards the downside. Further downside, platinum, we're stalling below this 1,350 zone. So as long as we stay below it and we fall below the 50-day EMA, more sellers could join in. Copper, very quickly on copper, and yeah, it has declined, and I still see downside pressure here. So I think that these trend lines could be the next ones to watch. So these trend lines are taken. The flatter one, slightly flatter one, is taken from the lowest point of July of 2022. The steeper one is taken from the lowest point of March of 2020. So good potential targets here. Let's see if we can reach those eventually. WTI oil, ladies and gentlemen. WTI oil, look at this. I mean, it's still holding nicely. I talked about this. I honestly, I kept on saying about this, that I'm bearish. Yesterday I did a quick little update on on here and this on our trading view page, and I said, look, I'm watching this, and I'm watching this upside line taken from the low the 24th of June. Great. Let's see if we can, if we can reach this. We reached it. I'm also saying that I'm watching that $65 mark. If we can clear it, I will get a little bit more excited with the downside. Of course, more bears could join in if we do fall below the $64 mark right here, because the forthcoming lower low will be confirmed. So in general, the kind of the summary of all this is that the conclusion is that we are watching this whole area between 64 and 65. If we can clear all that, then yes, great. Like I said, my forecast is working then, because I was saying I'm bearish in oil because this is what they want to do. This is what the current U.S. administration wants to do. They want to pump more. They're asking OPEC Plus to pump more, and that's what they're doing. In September we'll have an increase. We'll have an increase of 547 barrels to the 547,000 barrels per day of oil, basically crude, getting pumped. Right. I think, like I said, I'm aiming for that psychological $60 mark, but only if we do clear the $64, $65 mark first. Natural gas. We fell below the psychological 3 level. Okay. Simple as that. I'm leaning, as long as we stay below that $3 mark, I'm leaning towards the downside. Coffee. My beloved coffee here. Ooh, an interesting one. Looks quite, sorry, something fell into my eye. Anyway, this is interesting actually. So look at it. Let's examine the price action. We had a major decline here. Then we found support near the 277. We rebounded nicely, pushed back above the 300, level, and now we're drifting back down. We're kind of oscillating. We're moving sideways. Let's redo this actually. Let's see if some of these levels are going to work. But actually, something else that I wanted to pick up on here is potentially, not guaranteed, potentially, we have a little downside line right here. But at the same time, we have this line right here. Now, what do we see? We see a possible falling wedge pattern. According to all the TA rules, such patterns tend to break to the upside. So, can we get that break? Well, let's wait and see. The prevailing trend was to the upside, so that already supports this idea. But a confirmation break here is required. Cocoa. Pushing back up, beautiful. Look at this. After we cleared the upper side of the falling channel and said that I'm going to stay bullish, and there we go. We're pushing back up here. Yes, we did decline. We kind of slid along the upper side, of this falling channel, but we still remained above it. So in a way, now maybe this was enough. Now it's we're seeing this push either way. Look, ladies and gentlemen, I think if you want to get a little bit more comfortable with this upside scenario, I think just keep an eye on the current EMAs. If we do clear all of them, on the 50, the 100, the 200, if we clear all those EMAs, then yes, I'm going to go for some higher areas. Very quickly on wheat, what's happening here? Oh, very nice, near a key area of support, 506. Ladies and gentlemen, let's see what's going to happen here. If we can clear this area. If we can, I'll go lower. Sugar. Sugar is an interesting one here as well. We are near a key area of support near the $16 mark. So hey, we had a bit of a false breakout. Let's see if we can stay above that $16 mark. If we can, I will consider a move back up. Cotton, pushing back up. Look, this one's a little bit annoying. It's a little bit of like a roller coaster ride. But hey, what I want to see here is, are we gonna have something of a no, I think that I was thinking to see maybe like a falling channel here, but yeah, it's subjective, very subjective. But okay, look, if you want to keep this, I mean, you can keep it. I mean, here you go. Let's jump into the crypto world. Bitcoin remains above this 112 zone, 112,000 zone. I talked a lot about this. I said I was aiming for this one when we were breaking this. I said if we break through one of the sides here, and if it will be, let's say, the 116K, then I will go towards the 112. We got the test. We got the test. Beautiful. Now we have this upside line taken from the lowest point of April. Let's see if we can break that. If we can break that, we at the same time we break below the 50-day EMA shown here as the green line on. Then we also we're watching that 112, and if we can clear the 112K, I'm leaning towards the downside. Bitcoin Cash, still in this kind of rising channel pattern here, but look at this. We struggle with the 563 territory right here. Why this level is important? Well, I wouldn't say this is the most important, no. But somehow it has been doing the job before. Yes, we had a violation here, but it acted as a good area of support. Then we dropped. Then now it's acting as a good area of resistance. So if we clear it, I'll go to the upside. Very simple. Because at the same time, if we also can clear this downside line, that's great. You know, like I said, more buyers could join in. Ethereum. Ethereum is stuck a little bit, so it's not sure what he wants to do. I would say I'm at the moment, whenever we have a moment like this, I would say I'm just gonna, take a very, very conservative approach here, and I'm just gonna wait for a, either a drop below the 3,357 on the downside, or push above the 3,941 zone right there on the upside, and then I'll take it from there. Ripple. Ripple is flirting with that psychological 3 level, up and down, up and down. Look, let's get rid of this downside line, no longer needed, didn't really work, but the psychological 3 level still is valid, I would say. If we do stay somehow above that 3, then yeah, I'll continue targeting the upside, but if we start falling below the 50-day EMA here on the daily chart, I'm going to consider a bit of a move lower. Litecoin. Now, Litecoin has been popping, very interesting. Yesterday it rallied here. Look at this. Now it's drifting back down. So basically it's trying to push back below this downside line. Interesting, very interesting. Let's see if the bears succeed. If they do, I think that, yeah, we're kind of destined for a move back to 100 level, something like that. Dogecoin. Look, this one's still bearish. We're, struggling with the EMAs to push above those. So if we stay below that, I will go towards this upside line taken from the low of the 5th of August, or of the last year, or just, should I say, the lowest point of August. So basically, in a way, we can see a nice little correction back down. So, but again, for that, I need to see the rate kind of remaining below all the EMAs. Polka dot is. Yeah, it's still bearish, to be honest. After seeing it move strongly to the upside, now we're seeing it, on the downside. Okay. Look, long story short, for now, I would say this way, that as long as we stay below the 3.63 territory somewhere here, I'm going to continue targeting the downside. And finally, Tron, one of my beloved cryptos right now, honestly. Like, this is very technical. Look at this beautiful steep upside line, the short-term one, right? I mean, look at this. This is just amazing. This is taken from the low of the 22nd of June, and for now, I am gonna continue targeting the upside. My next target is the 0.3439. And let's see what's going to happen. That is, of course, if we continue to trade above that upside line. If we break it, I'm going to go to a little bit more to the downside. Yep. And especially if it falls below the 0.32 territory, somewhere around here. If it does that, well, anyway, more sellers could join in. So, ladies and gentlemen, that is a wrap. That is a wrap. Thank you very much for watching and listening, and thank you very much for that last like that came in very, very late. I really appreciate that, or at least it kind of got updated on my side very late maybe. But thank you very much, everybody. Thank you very much for watching and listening. And the like disappeared. Hey, oh well, it was so close. But anyway, look, ladies and gentlemen, thank you very much for watching and listening. I really appreciate your time. Look, I mean, there's not going to be any more Markets Talk webinar this week or next week. And I will pick up on the 18th, but surely there will be a few separate videos that I'm going to produce on a few separate pieces of information. So that's this week. So stay tuned. Do like and subscribe our channel. Hopefully you'll enjoy it. Yes, and we'll go from there, ladies and gentlemen. So thank you very much. I'll see you on the 18th. I'll see you on the 18th. Have a beautiful weekend, the next week, and yeah, I'll see you then. Bye-bye.